Most people believe that once their Social Security direct deposit is set up, the money arrives the same way every single month without any variation, and that the only thing that can change the amount, or the timing, is a decision made by the Social Security Administration itself. That is not actually how it works in 2026, and the difference between that belief and the reality has left a number of Social Security recipients confused about deposits that arrived later than expected or were held briefly by their bank with no clear explanation. So today we are going to explain exactly how the 2026 banking rule changes affect Social Security deposits, directly from the official SSA guidelines and published guidance from the Federal Reserve's Payment Systems Framework, so you have a clear and complete picture of what is happening and why. I am Andrew, and I have spent time going through the SSA's direct deposit guidelines, the Federal Reserve's ACH processing rules for 2026, and how financial institutions are required to handle incoming government benefit payments this year. Everything here comes directly from SSA.gov, Federal Reserve.gov, and NACHA, which is the organization that governs electronic payments in the United States. Before we get into this, if you find this kind of plain language explanation of Social Security and Medicare rules useful, subscribe and turn on notifications. Every week this channel covers one benefit topic in the same straightforward format, with no urgency and no drama. Now let us get into how the 2026 banking changes actually work and what they mean for your Social Security deposit. The most common misunderstanding about Social Security direct deposits is that the SSA sends money directly into your bank account and the bank simply receives it passively. Under this understanding, if there is any problem with a payment, it must have originated at the SSA, either a processing error on their end or a change to your benefit. This misunderstanding is completely understandable, because for decades the system worked in a way that made it feel invisible. The money arrived and there was nothing to notice or question. But here is how it actually works. The SSA sends your payment through the Automated Clearinghouse Network, commonly called ACH, and your bank receives it and applies its own internal processing rules before posting it to your account. In 2026, those internal bank processing rules have been updated in ways that can affect when and how your deposit appears. The SSA's role ends when the payment leaves their system. What happens between that point and your account balance is governed by your financial institution. We are going to go through each part of this in detail so that by the end of this video you have a complete and accurate picture of exactly what changed and why. To make this concrete, let me use an example. Consider someone like Harold. Harold is 73 years old, lives in Knoxville, Tennessee, and spent his working years as a warehouse logistics supervisor before retiring at 67. He has been receiving his Social Security retirement benefit by direct deposit for 6 years without a single problem. In February 2026, Harold noticed his deposit posted to his checking account 2 days later than it had in every previous month. Nothing had changed with his SSA account. His benefit amount was the same. He had not changed banks or updated any information. But the deposit was late, and his bank gave him no explanation when he called. Here's what was actually happening in Harold's situation. His bank had implemented updated ACH verification protocols that went into effect in January 2026, because the name format on Harold's bank account differed slightly from the name format in his SSA direct deposit record. His bank account used a middle initial that his SSA record did not include. The payment was briefly held in a verification queue before posting. This is not unusual. This exact situation has come up for Social Security recipients across the country in early 2026, and understanding how the rule works answers Harold's question, how Social Security payments actually travel to your account. Let us start with the foundation. When the SSA processes your monthly Social Security payment, whether that is a retirement benefit, a disability benefit, or SSI, the funds are transmitted electronically through a system called the Automated Clearinghouse Network. According to SSA.gov's direct deposit guidelines, the SSA initiates these payments several business days before your scheduled payment date, sending a file to the ACH network that contains your bank's routing number, your account number, and the payment amount. The ACH network, which is governed by NACHA, the National Automated Clearinghouse Association, then routes that file to your bank. Your bank receives the incoming payment file and processes it according to its own internal rules before the funds actually appear in your account. This is the step that changed in 2026. You might be wondering, if the SSA sends the money on time, why would it ever post late? The answer is that your bank applies its own verification and posting schedule to every incoming ACH transaction, including government benefit deposits. In most cases, this process is invisible and instantaneous, but when new verification requirements are in effect, there can be a brief hold before posting is completed. What changed in 2026, and why? Now that we understand how payments travel, we can look at what specifically changed. In 2026, financial institutions across the United States implemented updated ACH receipt and verification protocols as part of NACHA's ongoing rule refinements for the ACH network. According to NACHA's published rule updates, banks and credit unions are now required to apply enhanced account validation procedures to certain categories of incoming ACH transactions, including recurring government benefit deposits, to reduce fraud and confirm that incoming payments match the account holder on record. This next part is where it gets more specific. The validation process compares the name and account information included in the incoming SSA payment file against the name and account details your bank has on file for your account. If the information matches precisely, the payment posts on schedule. If there is any discrepancy, even a minor formatting difference like a middle initial, a suffix, or a slightly different version of a hyphenated name, the payment can be placed in a short review queue. The length of that review period varies by institution. According to guidance published by the Consumer Financial Protection Bureau regarding ACH processing timelines, most holds of this type are resolved within 1 to 2 business days. This applies in most cases. The exceptions are situations involving more significant mismatches, such as a payment directed to a recently closed account or a name discrepancy that cannot be automatically resolved, which may require your bank to contact you directly. In Harold's situation specifically, this means the 2-day delay he experienced was not an error at the SSA level. It was a brief hold applied by his bank's updated verification system, triggered by the middle initial difference between his 2 records. Once the hold cleared automatically, his payment posted in full with no reduction in the amount. What you can do to prevent a hold. And finally, this is the piece that ties everything together. The single most effective step any Social Security recipient can take is to verify that the name on their direct deposit record at the SSA matches the name on their bank account exactly. According to SSA.gov, you can review and update your direct deposit information through your My Social Security account online by calling 1-800-772-1213 or by visiting a local SSA field office. You might be wondering, what counts as a mismatch? The answer is that even small differences matter under the new protocols. A middle name spelled out in one record and abbreviated as an initial in another. A suffix like Junior or SR, present in one record but absent in the other. A maiden name used on a bank account that does not appear in the SSA record. Any of these can trigger a brief hold. The maximum federal SSI payment in 2026 for an individual is $967 per month. The average Social Security retirement benefit paid to retired workers in early 2026 is approximately $1,976 per month, according to SSA data. These are amounts that recipients depend on for essential expenses, which is exactly why understanding the timing of when they post and what can briefly delay that posting matters in a practical way. One thing worth understanding about how these banking changes connect to the broader Social Security system is that the SSI's payment schedule is entirely separate from your bank's posting schedule. The SSA publishes its payment calendar at ssa.gov each year, and those dates reflect when the SSA releases the payment, not when your bank will post it. For most recipients, the two happen on the same day, but understanding that they are technically 2 separate events explains why a payment can leave the SSA on time and still post a day or 2 later at your bank. This is not a warning, just something worth knowing so you have the complete picture. Before we finish, let me answer 3 questions that come up most often about the 2026 banking changes and Social Security deposits. Question 1. If my payment is held by my bank, do I need to contact the SSA? Answer, not right away. A hold applied by your bank is your bank's process, not the SSA's. Contact your bank first and ask whether your incoming ACH deposit is in a verification hold. If your bank confirms the payment was received but not yet posted, no SSA contact is needed. If your bank has no record of receiving the payment after 3 business days past your scheduled date, then contact the SSA at 1-800-772-1213. Question 2. Will the 2026 banking changes affect the amount of my Social Security payment? Answer, no. These changes affect only the timing of when a payment posts to your account. They have no effect on the amount you receive, which is determined entirely by the SSA based on your benefit calculation. Question 3. Does this affect Medicare premium deductions from Social Security? Answer, no. Medicare Part B premiums are deducted from your Social Security payment before the payment is transmitted through the ACH network. The amount that reaches your bank already reflects any Medicare premium deduction, and the 2026 banking changes do not alter that process. Everything we covered today applies generally. But your specific situation may have details that change how these rules apply to you. The most reliable way to get your exact answer is SSA.gov, where your My Social Security account lets you view your current direct deposit information and confirm that it matches your bank records. For questions about your bank's specific ACH posting policies, contact your bank directly and ask about their ACH hold procedures for government benefit deposits. For broader benefit questions, benefits.gov provides a free eligibility screening tool. And if you need free in-person help, the Elder Care Locator at 1-800-677-1116 can connect you with a local counselor. These resources are free, they are official, and they will give you answers specific to your situation, not general answers like this video does. One factual note before we finish. The SSA communicates by mail, not by phone calls demanding payment, not by texts claiming your deposit has been flagged, not by emails asking you to verify your banking information. If you receive communication like that, it is not from the SSA. You can verify any SSA communication by calling 1-800-772-1213 directly. I am curious, was there a specific part of how Social Security deposits are processed that you found most unclear before watching this? Leave it in the comments. The most common questions become future videos. That is the 2026 banking rule changes and your Social Security deposit explained as clearly as I can put it. If something is still unclear, the comment section is open and I read every question. If this was useful, share it with someone who had the same question. I am Andrew. I will see you in the next one.